So if you want tax advice so you can beat the IRS at their game, you go to a tax advisor, a tax strategist, a tax coach, or a tax attorney, not the referee. So that's the biggest mistake that business owners make is they go to the ref for tax advice on plays on how do I beat the IRS.
Yeah, that is a phenomenal analogy. Really, really good. I got to tell you, I haven't heard that one. Welcome to Sharpen the Spear podcast, where we help manufacturing executives command the front and win the floor. I'm Richard Walsh, creator of the Sharpened Impact methodology, and I've spent decades helping leaders transform frontline teams, unlock hidden profit, and capture capacity they didn't even know they had. If you want to see where your leadership gaps are costing you and how to fix them, head over to grittolead.com and run the free Sharpened Impact Simulator today. Let's sharpen your edge and get started. And we are back on STS, Sharpen the Spear podcast, with another incredible guest. I've got Rondi Lambeth with us today. And Rondi, no one knows Rondi better than Rondi. So, Rondi, we need the backstory, bring us up to speed, and we'll tear into the conversation.
Let's do it. I grew up in Southwest Idaho, and I grew up a little different than most people. I was born in 1971 to a single mom in high school, and her parents wanted her to have an abortion, and she refused to do that, so they kicked her out. She then had another baby 10 months later with my biological father, and then she had two more. So we have four with my biological father. I'm the oldest of 12 total because then my parents got remarried, etc. But I grew up really, really poor. And, I hear people say that I grew up poor. Well, I grew up in a 600 square foot shack with no running water, no electricity. And if we did not hunt the food or catch the food with a fishing pole, we relied on the dumpster. So we did a lot of dumpster diving as a kid because my parents were too proud for food stamps and SNAP. Well, back then it was food stamps. It was the funny money. And so I grew up really poor and I grew up dirty. My parents barely let me go to school. When I say my parents, I mean my stepfather, who was 30 years older than my mom. She met him when she had four boys, single, on welfare. He's 56 years old, just got out of prison for murdering someone. And he got out because they said he was criminally insane, had multiple personalities, schizophrenic, and which made life really hard because he would just lose his temper for any reason. I was going to say no reason, but he always had a reason. And he would beat us. He'd beat us unconscious. Sometimes he would torture us and kill our animals and our pets in front of us just to get his kicks off. So life was hard, but it wasn't that bad. It wasn't all bad. They taught me everything I need to know about money. They taught me that money was the root of all evil. Money didn't grow on trees. Rich people were bad. And Richard, I knew that wasn't true because occasionally they'd let me go to school and the teachers would let me leave during recess and I would go to the rich people's houses and take a bath. They would feed me, they'd wash my clothes. And so I knew that rich people weren't bad. I knew money wasn't evil, that maybe my parents were maybe they were wrong. So at 15 years old, I made a decision because I knew that if I stayed with my stepdad, Paul, and my mom and my siblings in that shack, that one of two things was going to happen. Either I was going to kill Paul or he was going to kill me. That was going to happen. And so at 15 years old, at 5 foot tall and 95 pounds, I left home. And I figured I could live on the streets and do better than I was doing with my parents. At least I wouldn't get beat up every day. At least I could probably run away from the abuse. So I kind of bounced around a little bit. I eventually ended up in John Day, Oregon, which was about 5 hour drive from Boise, Idaho. And there I went to work for a man named Wally Williams. And Wally Williams was one of the most successful men in this town. Very wealthy, owned many businesses, one of which was a funeral home. And so he hired me to wash his personal cars, the business cars, He hired me to wash the hearse and vacuum the floors and mow the lawn and just make sure the funeral home was always ready for a funeral. And fast forward a little bit, the main funeral director quit. And so I did what I normally did. I got out of school. I only went to school about 3 hours a day because I was on work release. Sounds like prison, right? But I only had to go to school until like noon every day. So I'd eat lunch and then I would go to work. And I'd work 4 or 5 hours every day for Wally. And one day I got in there and he's like, "Hey, I got a proposition for you. Uh, you can upgrade from mowing the lawn to becoming a funeral director." And I'm like, "Okay." And he was going to pay me $2,000 a month as a kid in high school, a junior in high school, and minimum wage back then was $3 an hour. So $2,000 a month, and I got a company car, and he was going to buy me clothes. I was like, "Sign me up. I don't care who I have to bury," literally. And so I become an embalmer and a funeral director in high school. And that made high school very interesting, as you can imagine. But I loved it because it was the first time in my life, Richard, that people respected me. That people, they didn't treat me like the dirty kid and the poor kid anymore because I had a brand new vehicle and I got to drive brand new Cadillacs and sports cars. And I got to wear a suit and the police respected me and the community. And so I started feeling good about myself. And at that point, Wally started teaching me about money and taxes and real estate investing and business and taught me what petty cash was and what a tax deduction was. And that's when my eyes started opening up to the world of being an entrepreneur. And so I really started studying that. And in high school, I become obsessed with business and taxes. And I've been doing it now for 37 years. I've been obsessed with winning the tax game and beating the IRS at what they at the game. And he taught me something that has stuck with me my whole life. I've applied it my whole life, and that's this: how much money you make is not as important as how much money you keep. And now, fast forward, I left Wally. I become a fireman. I had a whole career at Littleton Fire Department, which was my real dad was a firefighter. My grandfather was a firefighter, my family members. And so I really wanted to have that family thing. So I become a firefighter, but I never quit on the entrepreneur thing because I only had to work 8 days a month after my probationary year. So 22 days a month, I was a business owner, and 8 days a month, I was a fireman. And I thought it was really cool. I did a speech at Harvard a few years ago, and it was called Becoming Batman. And I was during the day, I was an entrepreneur, but at night, I was saving people. But it wasn't quite at night, but it's, 24-hour shifts. So I did that. And then in 2007, my little brother, I'm sorry, 2006, my little brother, who was about a year and a half old, maybe 2 years old when I left. And I left home with the promise that I was going to become rich one day and save all my family. And in my early 20s, I become a multimillionaire. And so I'm happy to say that I did change my entire family tree. There's not one single person in my entire family that's poor, that lives in poverty. Not one single person in my family that has to live in an abusive relationship. Now, I'm not saying they're all perfect. I'm not saying they're all rich and wealthy, but nobody is in poverty anymore. And they all know that when they get there, they know where to go, whether it's Uncle Rondi or Brother Rondi. But in 2006, I was at the fire department and I got a call from my mom and a whole bunch of phone calls from my mom. And she had told me she was crying. She said that there was an accident with my brother Zeke. Well, Zeke, who was a year and a half, 2 years old when I left, also become a fireman. And he wanted to be like me. And so I assumed when she said there was an accident, he got hurt at work because, we got hurt all the time as firemen. And so I called her and she's crying hysterically and I'm trying to calm her down and kind of get like what happened, how bad is it? And come to find out he got in a fight with his girlfriend. Earlier that day, some collection agencies called her, his girlfriend. He's 19 years old. and called her trying to collect on some money that he owed, a few $100. And so she broke up with him, said he was a loser. He'd never amount to anything because he couldn't even pay his credit card bill or whatever it was. And so he dumped her and he decided that his life wasn't worth living anymore. So he went and got a rifle and shot and killed himself over
Oh, wow.
a few $100 um, of BS collections. And so that really hit hard. Here I was, fireman of the year, saving 10 people a day. I was on the busiest rescue in Denver. So I mean, we ran calls constantly in that 24 hours. Multi-millionaire, living in a mansion, multiple houses, and yet my brother's suffering over a few $100. And so I decided, like, I'm not going to let this happen to any of my family anymore or anybody else out there. So I retired from the fire department and then I started a nonprofit called Fortress. And it was a credit repair company that would fix people's credit, no money up front. After we fixed it, we'd send them a bill. They would know how much the bill was going to be, but it was started as a nonprofit and then eventually turned into a very profitable uh, eight-figure business. And I've ran that now for 19 years. And now we've switched that, made so much money helping rich people with credit and many athletes and celebrities, people that if I said their name, you would know who they are. And you can go to my Instagram page and you see me with all these celebrities. It's because either I fixed their credit, I fixed their debt, or I eliminated their income taxes. People like Pink and Shaq and Andy Frisella and Ed Milet and Tony Robbins. So in 20 years, almost 20 years now, I've helped over 100,000 people maximize their credit, minimize their debt, and multiply their income and assets and eliminate their income taxes. And now on the credit repair, I do it for free. I don't even charge people anymore. 2 years ago, I had a massive heart attack, and the doctor said, "You can't work anymore. You got to eliminate your stress." And I said, "Well, I'm going to have to work." I tried retirement in the past twice, and all that ended up me doing was sitting around drinking alcohol as soon as I woke up in the morning, bored out of my mind. So I've retired twice, and I'm never going to retire again. So I decided that I was going to change the credit repair business instead of enrolling thousands of people a year and making tens of millions of dollars. I decided I'm just going to give it away for free and I'm going to make it to where you just go to the website and sign up. And we use software that does all the work anyway. So that's what we do now on the credit repair side. And then where I spend my time is the corporate restructuring for business owners. You know, Wally again said, how much money you make is not as important as how much money you keep. And when I was working with these really wealthy people like Pink and Shaq and all of them, they all had one concern, and that was they wanted to reduce their income taxes, or they all had a common concern, which is taxes suck, and they want to eliminate it. And so I decided to offer that service to my credit repair clients because some of them are business owners, and then to the public. And so that's what I've been doing now for the last few years is helping businesses restructure their business structure. Most people have an S corp or an LLC. The problem with you when you have one LLC or one S corp or one C corp, um, it doesn't do what it needs to do. You want something to where it protects your assets. It also reduces your taxes. And one structure, one entity doesn't do that. You have to combine them all together. And I'm not talking about trust. Trusts are the second highest taxed structure out there. The people that are like, put your stuff in a Cook Island trust, that is an absolute disaster. Or put your stuff in a Wyoming trust and then have your business own it, or have the trust own your business. That's horrible because it's going to put you in the second highest tax bracket. As soon as you pull the money out, you're double taxed on it. And there's no asset protection in a trust. Zero. Because as soon as you get sued, you have to notify the courts that you have a trust. And then you got to tell them everything in the trust. So now where I spend all my time, Richard, is helping entrepreneurs protect their assets, eliminate their income taxes, and buy cash flowing assets. And so that's a little bit about me.
That's that is a story. Rondi, we got off to a good start here, man. This was
Good.
great. I love I love the whole story because I come from kind of a, that not wasn't that poor. I was only gonna say you're poor. We didn't have much.
Yeah.
My family provided though. We took care of stuff. My dad kept us in a house and stuff like that, so it was good. But I totally get the poverty conscious mindset. When you're surrounded by that and it's always lack, lack, lack. We don't have this. We don't have this. That when you're young, that sticks with you. I mean, you have to do what you did, and that's an intentional mindset shift. And you did like what I did too. I got around wealthy people. I got
Mhm.
around people, self-made wealthy people who were making things happen, and they became the representation. Like I want to be like that. Like, and I found out those people like you did with Wally, like they're super encouraging. They actually want to help you. They'd
Yeah.
love to give you a hand up, and everyone thinks it's the other way around. It's like no, those people want to see people succeed because they
Yeah.
understand, especially if they're completely self-made, right? And they had to do it all and everything else. And they helped launch my business. One of my yeah, really got it launched. Let's say I
Yeah.
was doing it like super part time, and I'm training people, in a club and all this stuff, and they just took me to that next level and showed me the possibilities. And I love also that now it's this focus on entities, right? Because we talk about that a lot with companies because people there's no there's no real financial literacy out there being taught. I mean, at least in the general government schools, right? You're not
Oh,
going to
of
hear anything
course.
about that. And then you get into business stuff. Even then, you're not really learning about corporate structures, S corp, C corp, LLCs. What are you doing? Where it is? Like you said, do you need more than one? Yes, I have clients now. They have multiples, right? Because they have different businesses or under different things, and you start
Yeah.
to learn this and how to protect this. And the whole thing, and you said it best, is how much can I keep?
Hmm.
It's all about what you keep. We talk about this all the time on this show. Is our big thing is I always tell people I go revenue feeds the ego, profit feeds the family. And if you don't
Yeah.
understand that, like you got to just I spent a whole show yesterday just talking about profit, and that scoreboard of revenue is not the thing you should be looking at.
No.
We want to look at what are you keeping? And I was always about that coming up because that's what I knew. And taxes were crushing me. I had to go through all that stuff too. Multiple accountants. You're going to find different ones here, but okay, I'm on my third one. I'm trying to find someone who can, you know, just not be a compliance guy. I didn't know the difference, right? I didn't know the difference between tax strategy and accounting. A
Yeah.
CPA and a tax strategist. So talk about that a little bit. I want to let the people know what that's all about.
Forbes did a study. It was a 10-year study, decade long. Tens of thousands of business owners volunteered to upload their tax returns to Forbes in an attempt to save money. And they found this after 10 years and tens of thousands of tax returns that 93% of all business owners, regardless of their high priced accountant or not, paid more in tax than legally required to pay. 93%. When I go and stand on stage, I was on stage yesterday. There's 100 plus millionaires in the room. And I was the only one in the entire 100 that were doing the Augusta Rule. None of them knew what IRC 280A was, except for me when I asked. So I said, how many of you know what IRC 280? And then I said Augusta Rule. And then one hand went up, which was a real estate agent who was raised by a CPA. She's like, well, we're doing $200 a night. And she lives in Boise. And I said, you can do about $8,000 to $12,000 per day under IRC 280A, not 200. She's like, yeah, well, I just don't want to get too aggressive with it. I don't want to get an audit. It's so asinine and backwards. See, the problem with it, Richard, is people go to a CPA, certified public accountant. They go to the CPA for tax advice, for tax strategy. Imagine if Patrick Mahomes on Sunday is it's 30 seconds or whatever. It's a few seconds left in the football game. They're down by 5 points, but they're on like the 7 yard line. So it's down to the wire. Imagine he calls a timeout and he runs to the referee The guy that knows the rules, the guy that's the compliance guy, goes to the referee and says, Referee, you know everything about football. You know the rules better than anybody else on the field. That's why you're the referee. What play should I run to beat the opponent? That's ridiculous to even think that. And yet, that's what 93% of business owners do. They run to the referee, the person that went to 4 years of accounting school to learn accounting. You don't go to 4 years of accounting school to learn taxes. In fact, 90%, according to the IRS, 90% of accountants, CPAs, do not do tax business at all. If you are a good accountant, a good CPA, A student, B student, you don't open a tax return and work 80 hours a week for measly money. You go to work for Forbes, you go to work for the bank, you go to work for Amazon, you go to work for the SEC, you go to work for Fortune 500 companies. One of my good friend's nephew just graduated last year. His opening salary was $386,000 a year plus bonuses. First year CPA. Tax CPAs don't make that. Maybe they do if they have a business and they've ran it as a business owner, but as a CPA, you don't make it in the tax business. The C students become the tax CPAs. The D students go work for the IRS. So if you want tax advice so you can beat the IRS at their game, you go to a tax advisor, a tax strategist, a tax coach, or a tax attorney, not the referee. So that's the biggest mistake that business owners make is they go to the ref for tax advice on plays on how do I beat the IRS.
Yeah, that is a phenomenal analogy. Really, really good. I got to tell you, I haven't heard that one. It's awesome. And I'm going to borrow that on
Use
occasion
it.
because it's fantastic. This is a thing I have these discussions often with my clients because, okay, we fix their business, right? Turn them around. All of a sudden they're up 50%, 75%, 300%. You know, they're killing it. And they get and now what? What's the next thing that happens? They don't have everything you just talked about in place. So I'm like, okay, accounting is not tax strategy. It's different. Accounting is like someone you give a box of receipts to.
Yeah.
Okay. Like, and they're not going to help you. And you're doing that on January 1st or something, right? I'm talking tax strategy is an ongoing thing. Okay. You got different things happening in your business. Why would they be static? We got to understand that, but you got to have someone who really has that insight. Like you said, and described it really well, Rondi, is understand like this is a different animal. It's not compliance. Compliance is just, is everything in the right column? Do the numbers add up? Will I not get an audit or get in trouble or get a, hey, you still owe us, you know? I shared this story a couple times. So I had a construction business, everything else. So I had a big construction yard, right? I'm never there, but I show up and there's some guys working. They go, oh, hey, here's a car. The guy was looking for you. And I look and it's the IRS. Okay. I'm like, oh, okay. So I call him, you know, he goes, yeah, you know, I was out, I came by looking, you've got some overdue taxes. And I go, really? I go, well, how much is that? He goes, well, it's $12.04. And I went, you're out looking for me for 12? He goes, well, yeah, anything over $10. I go, I'm like, I tell you what, you at the office, I'll swing by. So I by and I go chat with the guy, good dude. You know, I get it. I mean, he's an IRS agent, whatever. And I'm like, okay, I got to check. Let me just give you that 1204. He goes, yeah, just make it for 12. I go, oh no, I can't do that. Because at 47% interest, 4 cents will even add up. Okay. Like
Yeah.
you guys are ruthless. Okay. So I gave him the 12. He kind of chuckled, gave my thing. I go, all right, maybe I'll see you around my yard sometime. You know
Yeah.
what I mean? So it was just that there's that $12. Okay.
Yeah.
Like, you think you got problems. Like, that's not even a problem, but like this guy's doing that. So that, and I look at that and go, wow. And so I started talking to this accountant and then another one did tax strategy. He goes, well, there's a big difference, right? So we really started to understand what's going on here, you know, and the overpayment, like every time as my business grew that I got, you owe us this from the IRS. Here's what I learned. No, I don't. And I give it to my guy. I'd get a refund. Okay. They say almost $1,675, whatever. Oh yeah. Come back. Oh yeah. Here we owe you 120. And he's, I'm like, oh no, I just became completely offensive. You know, just like we're going to play. I'm not playing this game. So right or wrong, I'm just like, I had to learn again through multiple accountants. And they still don't know anything about tax strategy. All I'm
Nope.
trying to do is not get whacked.
Yeah. Yeah.
Okay.
Their job is to make sure you follow the rules, follow the procedures, file on time, and stay out of jail.
Yeah.
And this is a thing that most people just play offense. That's what we're taught. Offense, offense, offense. Make more money, make more money. I did $50 million last year, but kept nothing. And they forget about defense. They forget about the playing field. They don't know, they don't consider the rules. And the reason that IRS agent was hunting you down for that $12 is because IRS agents, the way they are paid, yes, they get a salary, but they also get bonuses. They get paid up to 30% of what they go out and collect from you. So he made like $3.60.
Killing it.
But what's more important to that, Richard, you don't get assigned another case until you've closed out your previous cases. So you only get assigned so many cases, and until it's closed, you can't go collect. He couldn't go get the $1 million bill until he got rid of the $12 bill. That's why he was hunting you down.
Well, someone owes me a thank you then.
Yeah.
I kept him off their case for a while.
Yeah. Yeah. And I love taxes. I say this on stage all the time. I'm like, people think taxes suck. I love filing my taxes. It is my Super Bowl. I love it. Last year, I paid $41.61. The year before, so it's for 2024, $41. I made millions of dollars. 2023, I paid $316 because I have a life insurance license, and I referred somebody and I got a little commission. So there was Social Security tax. In my entire life, even though I've made tens of millions of dollars, sometimes in the same year, I paid less than $50,000 in income tax total. Even when I was a fireman, I didn't pay any income tax because I understood how W-2 employees could also offset their tax. Like in the big, beautiful bill that just got passed, there's a clause in there that if you're a W-2 employee and you do one thing, one strategy, just one, you don't have to get super complicated, you can offset up to $386,000 of your W-2 income. And it's just by investing in a product that the government wants us individuals to do. So if you're a W-2 employee and you're making several $100,000 a year, if you just invest in this one type of investment, up to $386,000 of your W-2 income, no tax, which is pretty cool if you understand the strategies.
Cool deal. That's it. See, that's tax strategy.
Mm-hmm.
That's thinking out front. That's playing chess, not checkers.
Yeah.
Okay.
Yeah, you're right. There's IRC 280A. I brought that up earlier. Do you know what that one is? IRC 280.
I don't.
IRC stands for Internal Revenue Code. So the IRS code, which is over 75,000 pages. Congress is who creates our tax code, our tax law. The IRS is simply a collection agency. That's all they are. They are a non-profit collection agency.
Thugs.
And I love the IRS. I settle IRS debt all the time for 10 cents on the dollar, saving my clients 10 or 90% all the time. Because just like with any collection agency, you can offer them less than what you owe. Yep. But IRC 280A is also known as the Augusta Rule, which you probably have heard of. Augusta Rule. Have you heard of that one?
Only when you mentioned it earlier.
Okay. So IRC 280, also known for Augusta, and the reason it's called Augusta is in Augusta, Georgia, every April. Are you familiar with what happens in Augusta, Georgia every April?
The Masters.
The Masters, where 200,000 people descend on this little tiny bedroom community of 200,000 people total, and they watch the golfers play a round of golf. Well, there was a senator that lived there in the early 70s, and he rented his home to one of the athletes for a lot of money, 6 figures, because there's nowhere to stay in Augusta, Georgia. There's not like a bunch of hotels and motels, and people don't want to have to drive hours to get into it. So the celebrities, the athletes, they buy or they rent the mansions on the golf course. So this senator rented his house to one of these golfers, and it was over $100,000 in the 70s. So that was a lot of money. Right. Well, then he went and got his tax bill, and he had to pay income tax on it. And he was pissed off. And he said, this is not fair. I helped Augusta and the Masters bring in $150 million of tax revenue, and now I have to pay income tax on it when I gave up my house for you. So what did he do? Well, he does what a lot of Congress does. They went and changed the tax code that allows now everyone in America, whether you're a business owner or not, whether you own the house or not, whether it's a house, an apartment, a condo, an RV, a boat, or even a van down by the river. If that is your house, you are legally allowed to rent it for 2 weeks, 14 days a year, 100% tax free. And there's no limit, Richard. And it's the only place in the entire 75,000 pages of the tax code that you don't have to report the income. No limit, no reporting. So now, if you decide that, hey, I want to rent my home, I want to put it on Airbnb, I'm going to let some strangers come move into my house, you don't have to pay taxes on it. So my question is, if I paid you $100, would you move your family out of your house so I could stay there if you get it tax free? Would it be worth it for $100?
No.
No. $100,000?
Yes.
Yeah. The limit, there is no limit, okay? But there is a limit because of market rate. So what the code says, it has to be market rates. The most expensive house I can find is in Aspen, Colorado. It's $55,729 per day. Times 14 days, that's $786,000. If you're married, both of you get to do it. So it's $1.5 million. So this family owns this mansion in Aspen, Colorado. They rent their home for $1.5 million per year and pay no income tax on it. Zero. Everyone can do this. Everyone. And yet very few people do it. Why? Because their CPAs are not strategists. Their CPAs don't know how to fill out the paperwork for it because it's a part of the code that says there's no limit and you don't have to report it. So how does the CPA report it? Because they're like, check the box. Well, the code says you don't report it. And so their heads like fall off. Their heads explode because it's like, I need to figure out how to report the income. It's not in, you don't have to report it. So here's how it applies for business owners like you and I. I don't want a stranger to come live in my house for 2 weeks. I don't want someone sleeping in my bed, sitting on my couch, going through my kitchen. It's great, if it's an Airbnb that you don't live in, but I don't want them coming to my house and doing it. But the code doesn't say you can't rent it to your business. In fact, there's a clause, it's called permissible purpose or terminology, permissible purpose. And the way that works with the tax code is as long as the tax code doesn't say you can't do it, then you have permission to do it. It's kind of like, do it and ask for permission later, or don't ask for permission, ask for forgiveness or whatever. But in the code, permissible purpose just says if it doesn't say you can't, you can do it. You're permissible, you're allowed to do it. So you can rent the business, you can rent your house to your business. So you, Richard Walsh, can rent your house that you live in to your business for 14 days a year with no limit on how much it is, and you don't have to report it. So instead of you taking a distribution, instead of taking a draw, instead of taking a salary from your business, let's just pull the money out through Augusta Rule. This is not a loophole. It's tax law.
Right.
But very, very few people do this. So there's just one other strategy that you can do to significantly reduce your taxes.
I love it. I love it. So you just mentioned a word that I always hear, and that's loophole.
Yeah.
Okay. Now, I always thought loophole, because you hear it and it's this negative is what business people do to skirt their responsibility to pay tax. I'm like, actually, loophole to me sounds like it's in the code and someone just knows it. And so they take advantage of it, like this Augusta thing.
Yeah.
Okay. Now the average person who doesn't know anything would be like, well, they're using them loopholes within the tax code. There's 75,000 pages. Have you read any of them? So whenever I hear the loophole thing, I'm always kind of, again, yeah, we're business owners and stuff. So I'm like, yes, like someone's reading something. Someone's got someone who knows what they're doing. Again, back to tax strategy, and they're bringing these advantages. The people who are willing to listen, to hire them, to pay for this advice, and let them save hundreds of thousands, millions of dollars, and that's totally okay with me.
Yeah, people that use loopholes generally don't know what a loophole is. And they
It's
just don't even know what to call it. And
right,
it's this whole thing that rich people are bad and tax the rich, and it's all nonsense.
right.
But here there is loopholes. There truly is a loophole. And I'm gonna explain the difference between tax law, tax code, and a loophole.
Good. That's the
So
clarity I need. That is the clarity I
tax
need.
law is IRC 280A. That is tax code, tax law. The Augusta Rule is the nickname because of Augusta,
Right,
Georgia. Okay.
right.
That's tax law. It is very vague, and it's on purposely done very vague. See, in Congress, if they put a dollar amount in the tax code, that if they want to change it, it takes an act of Congress to change it.
Gotcha.
So they specifically put no dollar amount and don't report the income, because if they reported the income on the tax return, they would have to account for it in the budget. So that's why there is no limit and there's no amount. On top of that, the loophole is nowhere in the code does it say you can rent it to your business. It says any taxpayer, and you don't even have to own the house. I have a client right now. I was just on his podcast, and I'm gonna save him over $100,000 in income tax this year on his rental property in Nashville, Tennessee. And he doesn't even own it. And he's like, well, I can't do it because I don't own it. I'm like, there's nothing that says you have to own it. So the loophole of the tax code of IRC 280A is it doesn't say your business can rent it from you. It says you as the taxpayer can rent your primary residence for 14 days a year. Don't report it. No income, no limit. The loophole part is renting it to your business, because it doesn't say you can rent it to your business. It doesn't say you can't rent it to your business. So that's where people get confused with loopholes. It's part of the law, and I don't participate in things that are gray. It's either written in the code or we don't do it. And a lot of my clients will bring strategies. They'll see something on Instagram or TikTok, and they'll come to me and say, "I saw," or they just send it to me most of the time, and I'm like, "Hey, that's fun. That sounds cool, but that's a loophole." And there is nowhere in the code that says you can do that. So we are not doing that, like a Cayman Islands trust or Cook
Right.
Islands trust. 3 weeks ago, the IRS put on their website, they don't have to notify people they don't have to send you a letter. They put it on their website. And on their website, they said if you have a foreign entity trust and you do not file your tax return this year and pay the 35% tax, we're going to hit you with 140% fine.
Yep.
And they know where all of the bodies are buried in Cook Islands. They know where all the accounts are. They know how much money's in there. So to give you an idea, if you had $1 million in your Cook Island trust and you're hiding it, you're going to get hit with a $1.4 million fine. You're going to lose all of your money, and you're going to owe the IRS another 400 grand at who knows what the interest rate is, but it's a lot with the penalties and fees. So stay away from, anything that's trust related, like putting your businesses in the trust, and it's just all nonsense.
Right.
There's attorneys, charging hundreds of thousands of dollars to set these up, and it's just bad news. Just stick
Yeah,
with corporate law.
yeah, it's it's a dance. You know what I mean? Everything's out there. Everyone's trying. Everyone's got their way. They all do this way, this way. Oh, I know how to do this. I know how to do that. Yeah, we shuffle this over here. And what I found, Rondi, is just like I kind of use the gut thermometer.
Yeah.
Like if it sounds kind of wonky, if it sounds like you're gonna get a no right out of the chute until further research.
Yeah.
Okay. Like I'm gonna have to go to I'm really gonna have to do some work on that. It sounds great, like most things. Sounds good up front till you get into the details, and then you're like that. you end up losing it all plus another 500,000 on top. Like that's not a great strategy.
Yeah, and there's, some of them are, especially with like Instagram and TikTok, you got to be really careful with the people just
Yeah.
spouting information. Like, oh, here's a great one. Section 179 says that you can buy a car and write off up to $500,000. You've probably heard that before, the Section 179
Yeah.
thing.
Yeah.
Section 179 does not say that. Doesn't say that at all. Bonus depreciation, which is separate from Section 179. Section 179 allows you to purchase certain types of assets that qualify for bonus depreciation. But it's not Section 179 that allows you to write off $500,000 day one. And so you get a lot of folks that will just spout off stuff for clicks and likes and
Yeah.
shock value.
Yeah,
And
it's Instagram and it's social media. I mean, it's like, what was it? The newspaper said so, so it must be true. It's just like now today it's the internet said it must be true.
yeah,
That kind of thing. It's a bad place to get your information.
yeah,
I
Mark
can tell
Twain
you.
once said, right? Everything's Mark Twain.
Yes. Yeah.
There's a saying that in the tax world, and it's pigs get fat, hogs get slaughtered. Don't be a hog.
Yeah.
And I have one, it's called the smirk test. If you can sit across from the IRS agent during your audit and not smirk on your tax deduction, then you're probably okay.
Yeah. Yeah.
And just don't be dumb and greedy. I mean, I love paying income taxes. I love it. I just don't pay very much.
Right.
And you're not legally required. That's the thing in America. It's all voluntary. It's not voluntary to not file. You are required by law that if you make money, you have to file a tax return. And if you don't, you go to jail. And most of the people that are sitting in jail is because they didn't file their taxes. It's not because they didn't pay their taxes. Now, there's tax evasion, which is completely different. But if you owe the IRS, if you filed your taxes, COVID hits, your business falls apart, and you couldn't pay your taxes, they're not going to throw you in jail. They're going to let you settle that for 90% off,
Right.
10 cents on the dollar if you simply asked. So remember, there's one tax code in America, but two tax systems. There's a tax system for the informed, tax system for the uninformed. Most
Right.
people are uninformed. And most people, it will never cease to amaze me for the rest of my life, Richard. Like even yesterday, I had these entrepreneurs just say, that just seems like a lot of work. And I'm like, I can literally double your net income
Right.
by doing one thing. I handle all of it. One thing, and it doubles your net income. What would you have to do to double your net income as a business owner? You'd have to
Right.
like triple your revenue for most
That's right.
business owners.
That's right. What's interesting, I think, Rodney, is just everyone they've been conditioned.
Yeah.
They've been conditioned to this. And it's like, that's got to be illegal. That's got to be this. It's got to be that. And you're like, you think so backwards. They say, you got to think, well, it's all about, I want to pay only what I'm required. So back in, I don't know when it was, 2000, 2002, something, an accountant, a CPA approaches me, he's talking to me about my thing. Hey, we can amend 4 years to your taxes. I can get you all this money back and blah, blah, blah. If it wasn't done right, I'm still searching for new accountants and everything. Okay, well, that sounds good. So yeah, let's do that. So he got me 20 grand back.
Yeah.
Right. You know what my bill was?
Yeah. Probably.
17.
Yeah.
17,000.
And the likelihood of your being audited now just went through the roof.
I just looked at him and went, you're a stinking criminal. You're a criminal. I said, I mean, I was going to choke him out, but I didn't. But
Yeah.
I'm like, 20 grand, I got 3, you got 17. This was a good deal for you.
Yeah.
I mean, that's the kind of stuff that's out there. And I guess if you're in business long enough, okay, you're going to see a lot of things come and go. You're going to experience a lot of, and I've had the massive tax debt, had to negotiate everything. I've done all the wrong things. I wrote a whole book about all my failures, right? I wrote a whole book about my failures. It was awesome. You know what I mean? But now they're cautionary tales for everyone else.
Yeah.
You know what I mean? But I've also learned, as I always tell people, my first 20 years in business, I accepted no help.
Mm-hmm.
I was anti-help. Okay. You talk about an ego bigger than the
Yeah.
room. Okay. That was me. And now I only look for help and I tell everyone else to get help and I help people. I'm like, I am Mr. Time Compression.
Yeah.
1 year with me will save you 10 years of, I can't even quantify the numbers. They're so big. Okay. Of the mistakes and bad decisions and everything else you make. And in this tax arena, no one escapes it. You have to search out the people like you, Rondi, who are going to do this. If they said double your net income doing one thing, like why are you not taking action? Like this is the stuff that you have to do because you work way too hard. You're building a business, you're taking all the risk, and you think it's like wrong to keep more money. Like there's something broken in your head. You got to get around some new people. You know what I mean?
Yeah, it's what one of my friends and mentors, Joel Bauer, who's a speaker coach, he was helping me come up with the pricing for my tax business. And I had a couple ideas, and he's like, that's not even close to be enough. And I'm like, and I was looking at it as what's it going to take me per hour? And he sent me, he's like, how long have you been doing this? And I said, well, really 37 years. He goes, what they're buying is not how long it takes you per hour, it's your life's work. And you've helped over 100,000 people successfully reduce their taxes, increase their credit. It's your life work. And he told me a story about Picasso where he was, and you've probably heard this, where he's sitting at the table and the lady walks up and asks for a drawing and he draws it and then asks for like a couple $1,000. And she's like, couple $1,000, that took you less than 5 minutes to paint that or draw that. And he goes, no, it took me a lifetime. Well, that little drawing that he did now is, last I heard, it sold for over $20 million. And what people don't realize with Picasso, there's a lot of Picassos out there. I mean, he did a lot, and they're not all millions and millions of dollars. There's some that just he did them so many times, they're not worth as much. And people, I tell folks all the time, what you pay me and what you invest with my service actually doesn't cost you a penny, not one penny, because every dollar that I charge is generally $2 that you're not going to pay in income tax this year. And then the structure stays in place for the next 500 years because I set up 500-year companies. So it's a one-time payment, but generations worth of tax savings. And you either pay me or you pay the IRS. And unfortunately, a lot of businesses just would rather pay the IRS and
Yeah, it's
complain about
it's
taxes.
I do as well as we come in, we organize these businesses, we we instill we change the culture, we do this. It's like you're not paying for the 90 days I'm here. It's the 5 year return. Look at the 5 year. It's 14.6 million. You pay
Yeah,
me 500,000 to fix this thing here today. I said that it's a pretty good. I think that's every day, all day, right?
yeah,
That's rinse and repeat. Let's do that again. You do it again at this plant. At this plant, yes, I can. Okay, that's a great investment. Can be more. So it really is that. It's not just it is life experience. It's mastery of what you're doing. But you said I talk to business owners and I'm like sitting at a table and just answering all their things they can never figure out in 5 minutes.
yeah,
It's the sketch by Picasso.
yeah,
And they go, oh, I go, okay, all right, see ya. Go do that. And they're like, what? I go, it's easy for me. I
yeah,
can walk in a place and see all the problems in 5 minutes because I've been doing it for so long and I've made all those mistakes. So I can see them really fast,
yeah,
and then again, but I love that you attach the value because you have to put the value on it. It's not, well, how much does it cost you to make that can of beans? You should only have 10% above that. Now, if you go to New York these days with the new mayor, that's the way it's going to be. If you go to grocery stores to come and run grocery stores, you guys have a good time out there. Okay, I'm gonna
yeah.
stay
I
here
know.
and listen.
My girlfriend's like, I hope he doesn't. We got to vote for. They need to vote for the murder of grandparents to save our grandchildren from the communists. Now, I live in Boise, Idaho, in America, and I'm like, I don't really care what happens in New York City. Just let it all burn down.
I'm
Now,
good
I
with
know
that.
there's some repercussions to that, but it's like there were 6 million people in New York City did not vote. It's
Yep.
their own damn fault. Let
That's
it
right.
all burn. It's their
That's right.
fault.
That's right.
And it's just going to make that pendulum. It's all the way over to the left. It's going to come swinging right back
Yep.
and wipe out. And people are going to leave. I have friends that live in Florida that are real estate agents, and they cannot keep up.
Oh, I know. That's a
Right.
place to be. I got a buddy down there too. I got a couple of friends down there. They moved down there permanently from Ohio because their real estate business like is just booming, and his business owners moving.
Well,
I
and
mean,
that's the thing. Business owners bring in their employees that are good people.
yep.
Look at the New York Stock Exchange. People don't realize they left in March of this year.
Yeah.
They are literally they did a study to find out if Mandami was going to win or not in February, and they found out in February. So in March, they applied to move to Dallas.
Yep.
So maybe they'll just completely shut it down in New York altogether. I don't know. It's
It's
going to be a
gonna be
fun ride.
it's gonna be fun to watch. That's all I can tell you, man. There's history there. I mean, I used to be a Chicago guy. I left Chicago. I had to get out of Illinois. I mean, we can move. The great thing
Yeah.
about being a business, well, I tell that to everyone. Well, you got a pair of shoes. You don't even need them, but you got to move. You're complaining about something and something. I'm like, just it's America still. Like you can go anywhere and do anything. Let's make that happen. Stop being scared. So it's cool to watch. But Rondi, this conversation for me and my listeners, I know, getting some real insight, some real strategy. I'm always trying to find guys like you. Okay, I'm going to air quote need a CPA to come on here and talk about compliance.
Yeah.
Okay, no one, that's just going to be off. That's going to be the lowest rated show I've ever done. Okay, just saying, and nothing against them. They got a place for them, but
Really,
that's not going to make people stay and listen. Okay.
yeah, they're there. Look, I'm not a tax professional. I'm not a CPA, and I specifically don't have all those designations and licenses because that would restrict what I can
Yep.
say and
There it
restrict what
is.
I can do.
Love it.
And I don't want to be restricted. And I would rather create the plays because I study the team, I've studied the opponent, I know the rule book. I create plays to help business owners win. And then I educate and train the CPA how to file the tax returns, how to input that data into the tax return, and how to file. Most CPAs don't know how to file a C Corp tax return.
Right.
It's
Right.
I was talking to one the other day. He does over 10,000 tax returns a year, and he filed 4 C Corp tax returns last year out of 10,000.
Yeah.
And I said, why is that? And his name's Jake, and he's like, well, there's double taxation, blah, 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 blah. I'm like, and that's the box you're stuck in because there's differences between C Corps. There's operating C Corps, and then there's private holding company C Corps. Holding company C Corps don't have double taxation. So if you're C Corp that's a holding company registered with the Internal Revenue Service is registered as a holding company, not an operating company, the IRS doesn't expect salaries and dividends, etc. And if you set it up properly where the C Corp owns your LLC, and the way you pull money out of your LLC is through your S corporation with a contract, you can now leave all of your profits in the LLC and don't have flow through income to you via K1. It stays in the LLC, max tax rate of 21%, instead of it flowing to you personally at 43 or 45 or 55 if you're in California. Then you can leave the money in the LLC. And then if you set up a second C Corp called an 831B, you can take $2.8 million out of that LLC, put it into a separate company, tax deductible for the LLC, tax free for the 831B company. And in 2 weeks, you can then reinvest that in the stock market. You can buy other businesses with it. You can buy real estate with it. You can buy crypto with it. And now instead of being in your personal account after taxes and investing it, you leave it in your business account and it's tax deductible. And now it all grows tax free, just like a 401k would. But if you stay with the CPA, no, they don't know how to do any of this. They are there to make sure the paperwork's filed properly, that's great. That's what
That's
you pay
it.
them for.
You just got to know man's limitations.
Can I share one more strategy with you? I got
Please.
about two more. Two more. And this one's a loophole. The first one's a loophole. The second one's not. The loophole is in the tax code, you only have to pay income taxes on income. That's why it's called income taxes. So if you went, or if I went out and I got a home equity line of credit on my house, and I pulled money out of it, or if I went to the ATM with my American Express card and I pulled a cash advance out on my American Express, I would pay no income tax on that because it's a loan, it's debt. You don't pay income tax on debt. So if I had a house that had no mortgage on it and I got a mortgage and I got $300,000 of cash from the mortgage, there's no income tax for that because income tax is on income. Income tax is not on debt. Here's the loophole. If you own stock in your C Corp, like Elon Musk does, and like Jeff Bezos does, if this is exactly what Jeff Bezos did, he commissioned to have a ship built for him. It was $500 million. Have you seen his ship that he built?
I haven't seen it, no, but that sounds like a lot of ship.
It's $500 million.
Yeah.
Well, in order to pay for that, he had two choices. He could go and sell his Amazon stock because he's not the owner of Amazon, by the way. This is the other thing, corporate law, which I love this part about it. He owns 12% of the stock, but he's not the owner of the company. So if you sue Amazon, you can't come after Jeff Bezos' money because he's not the owner anymore. And that's one of the things that I do is I set it up to where you own nothing but control everything. You don't own any of your entities anymore. That's the other ego thing. It's like, well, I own my company. I own 5 companies. I'll tell you right now, Richard, I don't own anything but like my shirts, my clothing. This watch that I have on, I don't own it. My C Corp owns it. I just have permission to wear it because I'm the director of the C Corp and I need to wear the watch. So, but I don't own the watch. So if you sued me and tried to take my $100,000 watch, you're not getting it because it's not mine. Okay. So what Jeff did is he needed $500 billion. So instead of selling $500 billion of stock, which then he'd have to pay $200 million in income tax on, so really he'd have to sell about $700 billion of stock, he simply went to a bank and got a loan for $500 million. And he used his stock as collateral. And anyone with a C Corp and good credit and decent finances can do this. I do this all the time. I get loans for stuff that I want to buy that's not tax deductible. And instead of me cashing out shares and taking dividends and distributions and salaries, I just give them stock in my company and I use it as collateral. So here's what he did. He got a $500 million loan, used stock as collateral. And in 5 to 10 years, he'll get another loan and pay off the other loan. So when you borrow, you don't pay income tax. That's the loophole. The loophole is in the code, it says you don't pay income tax on debt. You only pay income tax on income. Well, the loophole is what if I borrow money? I use my stock as collateral. I don't have to pay income tax. That's a loophole. Okay. Now, here's the tax code that I want to share with you, the strategy. This is only for business owners, by the way. If you're a W-2 employee, I'm sorry, can't do this one. Unlike the Augusta Rule, you can. If you are a small business owner, a family operated business owner, you are legally allowed to pay your children under the age of 18 $15,750 to help you in the business under IRS code 162A that says anything and everything that's ordinary and reasonable in the business that doesn't have to be absolutely essential can be written off. So, is it ordinary and reasonable to have an employee? Yes. Is it absolutely essential that it's your child? No. Therefore, you can pay your child. Now, under IRS code 2662, you don't have to do payroll taxes if it's your child in your family operated business. So now, as a business owner, you can pull off almost $16,000 a year tax free, which is tax deductible for your company, tax free, put it in your kid's bank account, which is your bank account because kids under 18 can't have a bank account. And now you can use that $16,000 for anything you want to use it for. And I have people all the time say, well, my business isn't doing very well. I got 4 kids, but I can't take $64,000 out of my company right now. I'm like, well, how are you going to pay mortgage next month? Well, I'm going to take my draw. Well, how about instead of doing a draw, you pay your kids $16,000 for modeling services for the next 12 months? Do you
Mhm.
ever take pictures of your kids? Well, of course. Put them on your Facebook, put them on your Instagram, put them on a Christmas card. Hire them. So that's one of the missed strategies that any business owner can do with kids. Now, you don't have to spend the money. You could use it to pay your mortgage, you could use it to pay for food and clothing for your child, or you could put it in a Roth IRA for your child. You could use it to put in your HSA. You could go buy real estate. You could go buy crypto with it. Imagine if you would have been, if you got 3 kids and you've been buying $16,000 of Bitcoin for the last 10 years, tax deductible. And then you had your Bitcoin purchased inside your LLC. So then it's long-term capital gains, but then you never pull it out. You just borrow with Coinbase. You go to Coinbase and say, hey, here's my Bitcoin. I got $1,000,000. I need $100,000. So I go buy a new fishing boat. Coinbase will give you a loan on your Bitcoin. That's not income tax, or it's not income, so it's not taxed. So there's just another strategy for you. And there's hundreds and hundreds and maybe thousands more inside that 75,000 page code.
Yeah, and it's just I have 6 kids. So see, it's another reason to
That's
have more children.
$96,000 a year.
That's right. That's right. I've known about this for some time and it's pretty cool. And it's again, there's so many great strategies out there if you get the people who do strategy.
Yeah.
So the big takeaway, Ronnie, get someone who knows tax strategy. Okay. Man, so awesome. And there is so many ways to keep your money, and it's just it's our duty as an American, okay, to keep as much as we possibly can. We're the ones working hard. Why just give it needlessly to a place that's going to just literally waste it.
Yeah.
Okay, it's going to go to corruption and waste and misuse and the whole thing. Like, keep it because you can do way more with your money than they ever will.
It's
Right?
the most patriotic thing you can do as an American
Amen. Amen.
is to legally keep more of what is yours. And this is how we fix Congress. If Congress didn't have the money to waste on fraud and abuse because we as Americans learn the tax code, and it's not that complicated. You don't have to do thousands of strategies. You do the kid, you do the Augusta rule, you do the borrowing, you do the short-term rental. That eliminates 90% of your income tax. 3 things,
It's amazing.
90% gone. And then you
I
just
had I had
structure.
I
Yeah.
had one other strategy.
Yeah. What is it?
I invented this, I
Okay.
think. I said, okay, if in April everyone would just have to write a check for their income tax and not get it taken out, that would solve the tax issue too. Because people would be strung up. Okay. It would be everything would change. They just no, you write the whole check. Forget this $200 a paycheck, $100 a paycheck. They're like, here, go write that check for $18,000,
Yeah.
$24,000. Just stroke that check and see how you feel putting that in the mailbox. See,
You know,
see if
I
you
hear,
don't go storm the steps of the Capitol.
I hear all the time, well, I don't pay any tax. I got a refund. Well, if you're getting a refund, you're paying too much. And here's the thing. They tried that. They tried that in the 40s. Income tax in 1940s was 94%.
Hmm.
94%. It was up to 85% until Ronald Reagan changed it in the 80s, depending on your tax bracket. Now, the rich never paid it because the rich are not stupid. They got rich because they know how to manage money.
Right.
But it used to be where you would file your taxes. So we didn't have income tax until 1862.
Yep.
Abraham Lincoln created it to pay for the war. It wasn't until 1909 that we had state income tax. And by 1911, most of the states brought it in. And it really wasn't until after World War II that individuals, employees had to pay taxes. Before it was all business owners, except for the top 1%. And they figured something out in the 1950s. People did not pay at the end of the year. So they created payroll taxes.
Exactly.
And they started taking it out of paychecks because now people don't even know how much they just look at their paycheck. I don't know how many people, hundreds, if not over 1,000 people have said, when I've asked when I do financial coaching, how much money you make a year? I don't know. They have no idea. They just know their paycheck's 700 bucks a week. They don't know it's because they're on salary for 40,000 a year and 30% is going to taxes. The most patriotic thing you can do to really make a difference in the world, to keep all of these idiots out of Congress, ruining the world with their crazy ideas, is to learn the tax code. Just three of them. Learn how to pay your kids, learn how to write off your house, and and learn how to borrow money from your company instead of pulling it out via distribution. Three things, and then 90% of your taxes are gone.
Yeah, it's amazing. God, that's good stuff. Really good stuff, Ronnie. What a great episode this has been, man. I appreciate it. You have brought, I'll tell you, every episode is a little different, right? We do pure conversational. And I was actually talking to someone yesterday and about the balance in the conversation. Okay. Like I like, yeah, 50-50 is really good. 60-40, the guest gets 60, I get 40. I go, unless I told you this yesterday, unless they're like really good, then 75% is totally cool. Okay. I'm just going to say you're in that category, my man.
So,
Okay. And I love it. I love it. I just, and I'm not a guy who geeks out about that stuff, but this is like of complete interest. Do you know what I mean? Like I'm happily listening because it's such good stuff. And I don't think I know they don't hear this enough. And it's awesome that you're getting on stages, you're out there doing this stuff, working. I know you work with a lot of big hitters too, but just letting the average person know this stuff, especially the average business owner, who's doing 1 million, doing 800,000, doing 1.5, doing 3 million, 5 million a year in revenue. And they're like, I can't make it. It's because of all the stuff you just talked about. You can make it if you understand tax strategy. Like it'll change your world. It's unbelievable. You know what I mean?
yeah, and I'm extremely blessed because I do work with a lot of wealthy individuals and I charge them a lot of money. Like it is absurd how much money I charge them. And it's no big deal to them because they know either they're going to give it to me or they're going to give the IRS. The
Right.
blessing for that is that allows me then to help the little guy. And so I
Right.
have programs for guys that are making $100,000 a year,
Right.
$200,000 a year. Now they don't get my personal one-on-one time because I
Right.
got to give that to,
Right.
the wealthy, but they get all the corporate structure and they get all the tax advice and they get the group Zoom calls and they get 50 hours of training to where it's so much easier just to keep more money than trying to make more money.
Yeah, man.
Most businesses are in like I'm not a business consultant, but what I've read is, if you're getting 20 or 30% profit margins, you're doing pretty damn good. And
Yeah.
if I could eliminate all of your income tax, which is about 30% of your revenue, I've just doubled your revenue
That's
or doubled your net
profit.
income,
Yeah. Your
net
profit.
profit
Yeah.
without doubling your income.
Yeah.
So maybe you're making $300,000 a year gross, and maybe you're netting, if you're lucky, 100 grand because you're paying all that corporate tax. If we eliminate the tax, now you're making 150, 200,000 on the same amount of clients. You just doubled your income with not doing any extra work. It's kind of a no-brainer. I
It's
just
it's
wish,
that
yeah,
it's that saying it's easier to keep a client than get a client.
yeah,
Once you got it, once you put these things in place, ooh, yeah. You know,
easier
the,
to keep your money than to make more money. That's for sure.
like you said, 500 years. Get the stuff set up the first time, and then you're down the road, and there's always going to be more.
Yeah,
So it's man, it's an incredible strategy. I'm a big strategy guy. This is one of those that it's got to be in the top three.
awesome.
With your plan as you're working, it's just so important. And I think you said it right. Don't be caught up in how many millions or whatever it is. The sooner you start, the more you're going to keep. Okay, it's irrelevant whether it's 100 grand or 100 million. Okay, you're going to be keeping. It's all relative, right? But you begin that process, you start keeping more money. That means you can do what more with your money,
Yeah, you can
right?
invest in cash flow and properties.
That's right. You can start to leverage that stuff.
Yeah.
Create them assets. That's what it's all about. We talk about that a lot on the show. And Man, this has been awesome, Ronnie. So let everyone know how they can get in touch with you, follow you up, get your information, connect with you. You know the drill.
Yeah, you can find me anywhere online. Rondi Lambeth. I'm on every single social media, whichever one's your favorite. My one warning is if you do find me on social media, make sure I'm the check mark guy. It's not an ego thing. I pay the extra 40 bucks a month to where I'm blue checked because there's a lot of people that grab my content and pretend to be me that sell crypto investing, and that's not me. So I'll
Yeah.
never sell you something online. The only way you can buy is you actually do a consult with somebody on my team. So anywhere at Rondi Lambeth, also rondilambeth.com. And then also, Richard, I want to offer your listeners a gift. Is that okay?
That's awesome. We love gifts.
Every month I do a tax workshop. It's 3 days, Tuesday, Wednesday, Thursday, for 1 hour a day at winningthetaxgame.com. So the name of the workshop is Winning the Tax Game. And I sit down and for 3 days, 1 hour a day, I show you how the taxes work, how the tax code works. I give you 3 strategies that you can implement by day 3 that will save the average person $50,000 this year, the first year implemented. The cost for your listeners is going to be free. Usually it's a little bit of money, but I'm going to give you a code. That code is tax free. So if you go to winningthetaxgame.com, you'll register. And if you do the basic service, then you put in tax free and you get it for free. If you want the VIP program, which is an extra hour of teaching with me with Q&A, then put in the discount code tax free and you can have that for free. So it's winningthetaxgame.com. Register. You're gonna have to put your credit card in, and then you put in tax free, and then Shopify doesn't charge you anything. And in those 3 hours, I'm going to teach you how to apply tax code with tax strategies that you can go back to your CPA. So here's the thing with CPAs. They're the referee. So you're not allowed, or the referee's not allowed to tell the players how to beat the opponent. So the reason the CPAs don't come up with tax strategy is because they're not allowed to do it.
Right.
But if you go to them and say, hey, I read this book or I attended this conference and I learned this strategy, the CPA is now legally allowed to implement it. But you have to bring it to them. Think of the referee. If you go to the ref and say, hey, can I do a quarterback sneak? Sure, you can do that. It's allowed. But they're not going to say, hey, Patrick, run the quarterback sneak.
Right.
So in these 3 days, I'm going to give you the strategies, the tools, step by step, how to implement it. And this is my way of giving to the community. And if they want to hire me to do all this work for them, I'll do it. But it's really about just helping out and giving the small guy access to what every single billion-dollar company does. And that's really what we do is we set up corporate structures the way the billion-dollar companies do that protects their assets, leaves a legacy for generations, and eliminates their income tax.
I love it. I love it, Ronnie. Amazing. Thank you for that gift. I always tell my listeners, you got to take advantage of the gifts. You know, people, you got books, you got workshops, you got all this stuff. You got to go, got to learn it, and then the biggest part, you got to do it. Put the stuff into play, man. Make be an action taker. Imperfect action beats everything else, man. It wins the day. So that kind of stuff, put it in place. So outstanding again, Ronnie. Thank you for all the time today. I really appreciate it. I was looking forward to this interview. It did not disappoint, and that's always appreciated. And for everybody else, we'll see you on the next STS podcast. Thanks for joining me on the Sharpen the Spear podcast. If you're a manufacturing executive and you're serious about unlocking hidden profit, improving frontline leadership, and taking control of your floor, go to grit2lead.com right now. Run the free Sharpened Impact Simulator and discover where your biggest opportunities are hiding. Don't leave millions on the table. Sharpen your spear, lead from the front, and win the floor. Until next time, stay sharp.